Ladies and gentlemen, welcome back to the channel. Markets are trading slightly higher today if you're looking at the headline S&P, and I think we are preparing for a breakout right now. It looks like markets are coiling from a technical perspective. I think things look pretty damn good, but we do have some news to share with you, some economic data, some upcoming earnings to keep on your radar, and a bunch of comments from different Fed officials today, including Fed Logan and Fed Goolsbee. And one thing in particular that Goolsbee says makes me incredibly bullish on this market. Fed Goolsbee says this could be the last inflation print before we start to see the effects of tariffs. The Fed is way too bearish on what tariff inflation is going to look like, and it's not going to show up. In my view, this is going to help kind of the 20% rally I've been talking about into year end. So we have a lot to get into here in this video. Ladies and gentlemen, hit that like button and subscribe to the channel if you have not done so already, and let's get started. Now, as far as economic data today, you did get the ISM manufacturing PMIs that came in lower than expected, lower than last month actually, at 48.5. The estimate was 49.5, and last month was 48.7. So you did come in on the lower side. Manufacturing employment came in at 46.8. The estimate was 47. So that came in low as well. Construction spending came in negative 0.4%. The estimate was positive 0.3%. So also worse than expected. New orders came in at 47.6. The estimate was 48. And manufacturing prices came in at 69.4. The estimate was 70.2. So really just across the board, weaker than expected economic data today. Now, you also got a speech from Fed Jerome Powell. And before we get into all of the Jerome Powell headlines, let's start with the headlines that came out in the morning. U.S. Department Treasury Secretary Falkender says, I think we will see some deals before July 9th. He says that some trade deals should be imminent. Fed Logan says, despite the uncertainty, the overall economy has been resilient. She says that labor markets are currently stable and that inflation is still somewhat above target. She says that if tariffs change inflation expectations, that would be significant. Again, I'm in the camp of, I don't think we're going to see inflation from tariffs. I don't think the economy is in a place where you can just raise prices on people and they continue to buy products at the same demand level that they are right now, right? Imagine if, again, a bag of Doritos went to $7 versus $5. I know it might be $7 where you live, but it's $5 where I live. You may buy less Doritos. Imagine if a McDonald's coffee was no longer $2.11, but was $3.50. You may buy less coffee, and the offset to that is lower volumes, which tend to be worse than slightly lower margins. Fed Logan says the risks from tariffs are higher unemployment and higher inflation, putting two Fed goals in conflict. And according to CNBC, Trump and Chinese President Xi are likely to speak this week. A senior White House official told a CNBC reporter on X that Trump and Xi are likely to have a direct talk this week. Quote, I'm told the call will come very soon, but probably not today. Trump's tariff legal foes ask the court to halt levies during the appeal process. So don't be surprised if that headline comes out at some point that tariffs are null and void through the appeal process. It was like 12 hours that we had the tariffs that were deemed null and void, and then a judge reinstated them, and now we're just kind of waiting for the next ruling or the next judge to say what's coming next. We're kind of just in limbo and uncertainty. And I think that's why markets are, yes, coiling, which looks good for a breakout to the upside, but just kind of trading sideways here. Nobody really knows what's next. As I've said before here on this channel plenty of times, the markets can handle bad news pretty well. Again, like 145% tariffs on China, like the bad news is still bad news at some point, and that's why you had the 20% crash. But they're pretty good at handling bad news. We're really bad at handling uncertainty. It's human nature. You hate uncertainty. You want to know yes or no. Can you do this? Can you not do this? Uncertainty drives people crazy. Also, keep in mind that while today we don't have much as far as earnings, tomorrow we have Dollar General in the morning. That's going to be a big one to judge the state of the consumer, and especially the lower income consumer that historically shops at Dollar General. I think Dollar General looks at a map and says, where's the lowest income earners, and builds stores or locations in those areas. At least that's kind of how it seems. So Dollar General, really a barometer for lower income consumers more than anything else, which again, hopefully the tax bill does go through with no tax on tips or no tax on overtime, which, you know, especially no tax on tips, they tend to be lower income earners. And maybe you can actually see, you know, the consumers start to recover en masse and get out of this 3.5-year-long recession. But beyond that, you also have NIO, which can affect other EV stocks, and Ollie's, which another, again, retailer there. Throughout this week, tomorrow and after hours, CrowdStrike, Hewlett Packard, Asana, Guidewire, Couchbase, Sportsman's Warehouse, Wednesday pre-market, Dollar Tree, Sprinkler, and then Wednesday and after hours, MongoDB, PVH, Five Below, ChargePoint, Thursday pre-market, Ciena, Cracker Barrel, Toro, and some others. And then Thursday and after hours is going to be another big day with Broadcom, DocuSign, Lululemon, Samsara, Zumiez, Braze, and a couple of others. So you do still have some pretty important earnings this week. Broadcom, especially for that AI trade. DocuSign, a little bit more of that software. CrowdStrike, again, software. MongoDB, software. PVH, Lululemon, Dollar General, Cracker Barrel, Dollar Tree. Focus on the consumer. Because while a lot of the times the economic data that we get is delayed or it's just not great, the way that the data is calculated is honestly terrible compared to other countries. Earnings give you a better insight to what's actually happening, because you cannot lie legally on conference calls. You have to tell the truth, whether that is good or bad, or your booty going to prison. Okay? That's why I always put more weight in company earnings than economic data. It's just more accurate. Now, the CNN Fear and Greed Index today coming in at 63. Market momentum, extreme fear. Stock price strength is greed. Stock price breadth, extreme greed. Put and call options, neutral. Market volatility is neutral. Safe haven demand, extreme greed. And junk bond demand, also in extreme greed. If we take a look at the AI Investor Sentiment Survey, as we've talked about over the past couple of weeks, you did have a flip from people have been very just bearish on this market. Like the bears were outpacing the bulls by 2x for the last 2 months. Okay. And the week of May 21st, 2025, you actually flipped that to there being more bulls than bears. Well, last week you flipped back again to about 10% roughly more bears than bulls. This Thursday is going to be interesting as well. And believe it or not, the more bearish people are, the more bullish you should be. You should really look at this as a contrarian indicator. And that's how I've always looked at this. And that's how I will continue to look at this. If the bear percentage goes up, I get more bullish. I can't help it. That's just ingrained in me to be a contrarian, and that has served me well. Now, the percent of stocks trading above their 50-day moving average coming in at 62.71%. Again, still on the higher end side, but relatively normal ranges for average bull markets over the past couple of years. There's nothing spectacular here. It's not super weak. It's not super good. There's really room for this thing to go in either direction. And the reason why it's so high is because the correlation in markets has been so high. Stocks have went up together. And they're going down together for the most part. You could see here, stock price breadth. Okay. This is really just, again, a metric of our stocks correlating with each other. And you're at some of the highest levels you've been at in the last year, even though some of that correlation has calmed down a bit. Stocks are very correlated today compared to April, where the breadth was terrible. Okay. Some stocks were doing okay, some stocks not okay. Obviously, 20% decline. Some stocks declined 10%, some declined 60%, right? That's a divergence in breadth. And right now, that is not happening. Fed Goolsbee says, so far we've had excellent inflation reports, surprisingly little direct impacts of tariffs. I don't know if that will remain true in the next 1 to 2 months. Here's the deal. By July, we're going to be like, oh my gosh, there is no inflation from tariffs. The economy is doing okay. The Fed can be in a much better position to start cutting rates. And I wouldn't even be surprised if we're looking at multiple cuts by the end of this year. And that's part of my bull thesis on why I think markets are going to rally 20% into year end. It's because we're not going to see inflation. The economy is going to be strong. And hopefully with some of the tax bill deregulation, we can start to see growth actually pick up. And some of the barriers legally start to be ripped down from that deregulation. And again, when you have deregulation, a focus on AI, a consumer that spends all of their money, that's typically a pretty good setup for the economy and for markets. Fed Goolsbee says, I still think underneath all the tariff dirt in the air, rates can come down over the next 12 to 18 months. Again, I think it's going to be a lot faster than the Fed thinks. Fed Goolsbee says, I still think if we can get past this bumpy period, the dual mandate looks pretty good. And unfortunately, Jerome Powell does not comment on monetary policy or economic outlook in prepared remarks. Now, Fed Goolsbee says the recent PCE inflation print may have been the last vestige of pre-tariff impact. If this is how the Fed is thinking, they're going to be absolutely shocked when we don't have inflation from tariffs. And that to me makes me pretty bullish. So again, it is a bit of a mixed bag today. Some stocks are doing really well, some stocks not doing so well, some sectors doing well, some other sectors not doing as well. But overall, I do think we are preparing for a breakout right now. And I think that breakout could be coming soon. We do have a lot of economic data coming out this week still. A bunch of jobs reports, to say the least, with a big one on Friday. So let me know your thoughts on this down below in the comment section. Have a great rest of your day, and I will see you in the next one.